Hello, XRP community. We have an urgent policy and market update at a tense moment for crypto. Across major venues, the short side now dominates positioning, and that skew is shaping near-term price action. At the same time, lawmakers in Washington are pushing to finalize a U.S. crypto clarity bill before year-end, even as a prolonged government shutdown threatens to slow the very approvals the market is waiting for. Tonight, we will connect those dots and lay out the specific levels that matter for XRP. Let's start with positioning. Derivatives dashboards show the bias has shifted towards shorts across multiple exchanges. In plain terms, leverage traders are betting on more downside, and that changes how every bounce trades. Short-heavy tapes often produce sharp, two-way moves, quick drops when bids vanish, and equally quick squeezes when shorts get crowded. Our job is to define the range and let confirmations, not emotions, decide the next step. Liquidations confirm the stress. More than $700 million in long positions were wiped out over the last day. That number by itself isn't a forecast. It's a description of forced flows. When leverage gets reset, the market often stabilizes briefly before choosing direction again. For XRP specifically, spot is holding around $2.79 with modest intraday volatility. That keeps a well-defined pivot in focus. Hold 2.79 to 2.80 and we can attempt a reflex bounce. Lose it decisively and the door opens to a controlled probe toward 2.70. Tell us in the comments whether you expect a 2.70 tag before higher or a hold above 2.79 to 2.80 and an immediate bounce. If you want a printable volatility playbook with levels and validations, funding and open interest bands, plus an exchange balance checklist, write playbook, and we will publish it in the next update. Now to policy, because the calendar will set the tempo. On Capitol Hill, committee leaders continue to signal that a crypto clarity bill is targeted for passage before year-end. That is constructive for the structural thesis, but it collides with an operational reality. A government shutdown impairs agency workflows. Practically, that means timelines for ETF decisions, bank charter and licensing reviews, or anything touching the OCC or the Fed can slip. Delayed doesn't mean denied. It means the market must budget for slower approvals and occasional headline whiplash. There's also a liquidity wrinkle that matters for risk assets. The U.S. Treasury has been conducting buybacks of outstanding government debt. In theory, this can lubricate funding markets and, at the margin, support risk-taking if conditions are calm. In practice, it is not a light switch for crypto. Transmission from buybacks to digital assets is indirect and uneven. Treat it as a tailwind, not a catalyst. The geopolitical tape, meanwhile, produced at least one tentative positive headline around de-escalation. Markets have largely shrugged so far. That tells you what's in the driver's seat: positioning, policy timelines, and microstructure on the exchanges. So how do we navigate XRP in the next 48 hours? Use a stage plan built on confirmations and invalidations. First, structure. If price reclaims and holds above 2.79 to 2.80 for a full session, and spot volume improves into the U.S. close, treat that as a constructive sign. If price loses that band on rising volume, respect the potential drift toward 2.70 and wait for fresh buyer footprints there. Wicks that get bought and a funding reset. Second, derivatives posture. Rising open interest with stable funding is healthy risk-taking. If funding flips negative while price stabilizes, shorts are paying to be short and squeezes become more likely. If funding runs hot positive under resistance, that is a don't chase signal. Third, exchange flows. Net outflows after red hours often precede steadier opens. Large net inflows into strength can cap rallies. Watch the balances at the end of U.S. trading and the Asia handoff. They frequently telegraph the next session's tone. Fourth, headlines. Expect mixed signals around the clarity bill, ETF windows, and agency capacity during the shutdown. None of this changes the longer arc. Migration to ISO 2002 messaging, real-time rails, and tokenization, but it does change pacing. Build patience into your plan. Let's talk risk management, because survival is a strategy. Size positions, so a routine 2 to 3% intraday swing does not force decisions. Decide in advance where you add and where you step aside. Letting a stop execute is cheaper than improvising inside a liquidation cascade. If we tag 2.70 and the reaction is weak, low volume, heavy exchange inflows, assume the balance will struggle. If we hold 2.79 to 2.80 and funding normalizes while open interest rebuilds, respect the possibility of squeeze that resets the range. Before we close, a quick word on narrative fatigue. It is tempting to blame a single venue, bot activity, or a headline for every move. Microstructure can amplify volatility, but the bigger drivers are still the same: positioning, policy, and liquidity. Shorts are in control for now. Policy aims to clarify by year-end, but operational delays are real. Liquidity from Treasury actions is a background support, not a switch. Within that framework, XRP has two immediate jobs: defend the pivot at 2.79 to 2.80 or discover bids near 2.70. The rest follows from there. Share your base case: 2.70 test first or hold and bounce. And list the 3 signals you want us tracking daily: levels, funding/open interest, and exchange flows. If you want the volatility playbook, drop playbook in the comments and we'll deliver it in the next update. Stay disciplined, stay data-driven, and we'll keep you on the right side of the tape.